Hello, everyone. This is Greg from Higher Low. As promised, I said I would do the weekend video journal rather than just the journal itself. So let's get started. Coming into the week, we were watching this cup and handle pattern to see if he could trigger and see some follow through. And we closed last Friday, right around here. We actually triggered it early in the week, Monday. Kind of did a retest and actually took out that April high, which we thought was pretty important. But then towards the end of the week, it was not able to see any follow through. What we really wanted to see was kind of a retest here, and then a bounce and follow through towards that 2180 target and all-time highs. But that didn't happen. So now the market's sort of in a flux. At this point now we are back below. If you're looking at this as a cup and handle, we're back below that handle breakout level, which is this white line right here. And what that's doing though now is it's putting us in a very questionable environment. If early next week we can rally, retest, maybe do something like that, then away we go. The risk here becomes a reversal pattern back below the range. And that would look something like this. So we have our cup and handle. And this is what happens sometimes, especially with cup handles. This is the patterns don't always work, but they give us a place to understand what risk reward looks like. And we're not going to not trade a pattern just because we don't believe that it's going to play out, because the move here is a 4% upside move. Now, that being said, when we get back below here, it's sort of risk back off until we can get back below. But you don't lose very much money if you're trading it correctly. So what happens here now is, we have the cup and handle. It's sort of failed to this point. Now, it hasn't completely failed, and we'll get into that in a second here. But the risk here now is that this becomes a left shoulder, and this is our head failed breakout, and that strength will be sold back into this neckline, this breakout retest next week. And now we have a little head and shoulders reversal pattern that could take us lower. Coming into Thursday and Friday, I said in the end of day notes on Thursday. Now the whole week we were saying nothing to worry about bearish wise, nothing to worry about, and then we get this gap down rally, and now we're looking. This is what happened Friday. I said in the notes on Thursday that we have bearish price action for the first time that we need to be aware of, and that was basically a little head and shoulders pattern right there, and the target on that was actually acquired. Let me just quickly look here. I have it in the notes. The downside target, I believe, was 2095, and it acquired it, went through it, and then rallied into basically a 2096 close. So now in the shorter term time frame, like I said, the risk here is that we get a bounce on a continued rally Monday morning that's has a very good chance of now being sold, because anyone that bought this breakout and got caught in this gap down and didn't get out is now underwater in their position and might be looking to sell into strength. And so that that's the risk, is that we get a rollover. Now, if we can get some catalyst to take us up through here, then it's a different story. But this is the risk now. We've now more or less failed this pattern. Now, if we fully fail the pattern, we need to take out the neckline low, or the cup low, right? So what I mean by that is, we'll put this cup back on here. Okay, this is your handle. Okay, so to kill the pattern, we have to take out the handle low, right? But what we're looking at here is sort of, this head and shoulders top. So any bounce and then the neckline, that's basically going to do it. So that's sort of the risk now, that we're gonna kind of see that. We have two unfilled down gaps now to fill. So it's possible we get up here and fill, and then go back down. But it does feel like at best now we're, the call for all-time highs is at risk, barring some massive rally next week. Now we do have options expiration, and we know that the market likes to rally into those. So I'm not going to say it can't happen. I'm just saying that the risk here now is if you're asking me how I'm going to trade it, what I'm going to do is be looking to sell strength up on a bounce up in here. particularly if it gets just above this and it fails. I'm going to be looking to sell that strength until it can show me that it wants to get back above here. And the way that it would do that is probably get up back above these April highs, retest here, and then we can start to see, I start to be a buyer in here and get long to go higher. So that's kind of what I'm looking for. But if you ask me right this second, we'll have to see what the price action looks like Monday. It'll change my mind. Traders, we have to react to the market. If you ask me how I'm going to probably trade it, I'm going to be looking to be a seller of strength here, just because I think that's just the way this looks right now. It just looks like it wants to fail back into the range. We'll get into some of the other things that make me feel that way as well. So if we look at the Dow, Friday I was saying that, I think I put out a tweet in the afternoon. Let me just clean this chart up for you guys. I put out, so we were watching this kind of head and shoulders, inverse head and shoulders pattern, and we were like right in this area here in the afternoon, and I said if this thing can't hold this level on the retest and go, this thing's in major trouble, right? And that's exactly what we're seeing. We're seeing now is, look, we had a head and shoulders that failed, right? Went down, boom, boom, and it basically trapped and went higher, and now we're starting to see the exact opposite here of an inverse head and shoulders fail. And what that's telling us now is that we are in a range environment rather than any kind of, major, edge either way, right? So now it's more, to me, the big move here comes on the break of this range on either direction. So this is basically like a 800 or close to 1,000 point range, or 800 points. This is 18,100, and this is 17,300. So it's like an 800 point range. So the break of this range over time is going to be the main thing that we're going to be watching for, more than just the little patterns. Now, if we get up in here and we start to see a head and shoulders pattern, we're going to, obviously want to be a seller at the top of our range. And if we get down here and we see an inverse head and shoulders pattern, we want to be a buyer towards the bottom of the range until the range is broken and we start to see follow through either way. So it either, what I mean by that is, we eventually get down here, it breaks down, maybe finds some support, and then comes back up here and tests. Maybe we want to be a seller here with a tighter stop, and then it rolls back over, and then we can start thinking we're going lower, and vice versa up here. Maybe we get something kind of a cup and handle. Who knows? Up towards the top of the range. But what you want to see is a breakout, kind of a retest, and then follow through on the upside. But I think that at this point, when you see two larger patterns like this both fail, that kind of tells you that you're more of a tug of war range-bound environment than you are in either a bullish or bearish environment. So I think watching this 900-point range really becomes kind of the key, more than anything else that could be going on. If we look at the Russell, kind of the same thing. Let me clean up this chart. So on the daily time frame, this here is a lower high. We broke this kind of cup and handle here, or kind of inverse head and shoulders, right? And now we broke out and we're retesting. So it's going to be very important to see the Russell hold this. And I would suggest that you guys put this on your charts, on your radar, to watch what's going to happen here. If this area is retested, you're going to want to see it bought and then this high be taken back out, and then away we can go. What we don't want to see, at least from a bullish perspective, personally as a trader, I don't really care. I'm going to position myself according to price action, but a failure here is likely to move pretty quick. As we say, failed moves from a failed breakout come fast moves, and this is what this would look like. We would come down in here, we'd probably get a little bounce, and then we'd have a nice little head and shoulders, and that would take us down into back into the February lows. Now, if we look at the weekly time frame on this, there's a very good case to be made for that to be happening. The weekly candlestick is absolutely repulsive from my perspective. This is not a very bullish candlestick, okay? This is, first of all, it's a lower high from this perspective there. This is a lower high. This candlestick is a major selling point. If that gets taken out to the upside, then it's very bullish. But usually, what this does not I would be seller of strength into that high for 100% positive of that. And if we look at this weekly time frame, this is something we've been looking at, scratching our head about. This to me looks like a head and shoulders top right here, and that candlestick might be our warning that this thing is about to roll back over. We will see over time. But we're going to want to see this high taken out to have any confidence in any kind of bullish position. But below that, I'd be a seller of strength, and I plan to be a seller of strength below that high for sure, because that is a very, very ugly topping candlestick. So we will watch that closely. Into the Russell one more time here on the shorter time frame. And we can see that this appears to be the formation of a little head and shoulders. This is the 15-minute chart. So, like I said, some strength on Monday, in my mind, is a place that we want to be looking to sell. Do we get back up and fill this gap? Possibly. But again, I'll be watching that closely. Particularly, what I will probably do is draw a trend line in here and try to be kind of looking to see if it can get back above that area, and if it does, then maybe it gets up and fills this gap. But this might be an area to just try to sell, or look for some weakness, something to be sold into this area. In other words, what I'm going to be looking for is something, like this, where it just rolls over here, and then what we have is a head and shoulders top that would target, what's this, 1160. 1190, 30 points down, so 1130. So let's just see what that looks like on the daily time frame. Where would that put us, or at least the 30-minute time frame? Now, that puts us back into this area here. It'd be like right in this area. Maybe this is some support here. So that's what we'd kind of be looking at. But it's very possible too that this is just bought, and this just is a pennant. And that we just kind of do something like that and we go higher again. But this weekly candlestick is pretty ugly. That was all the way up and then all the way back down. So strength is being sold. So it's going to be important for the bulls to take this area out. And if they do, then you have to give them the benefit of the doubt. But that until then, I'm going to be looking for some weakness into these, up into this, as it moves towards this area up in here. That'd be a place that I'd be looking to sell and then change my mind. Again, risk reward. Let's see. We went over the Dow. We went over the Russell. Let's just take a quick look at the NASDAQ. Same thing. Clean this chart up. Looks to me like this could be forming one of these sidewinder tops here, a rally up in here, and boom, something like that. So again, it'd be kind of a look at this level here. Oops, excuse me. We'll do it with this. Maybe we want to look into this level here, and particularly in a gap fill. I'd probably definitely sell that. But the risk reward is so favored for you. But like right in here. If we can get a rally up into this level here in this 49.40 area, it might be a place to look to start selling for that right shoulder to move lower. Get a breakdown and come down and fill this gap here. So, that's sort of what I'm looking at. But this does seem to be more of a range-bound environment, so it looks like we're going to be just going back and forth for a little while here until one of the sides wins. If you ask George Soros, he thinks the Bears are going to win. So. That does it for that. So I think we looked at the indexes. I think clearly, at this point, if we go back to the S&P, it feels like it's a place to be kind of selling strength now, particularly below this cup level. So if it does get above it, if it comes back below it, I think you want to be you want to be a seller on that re-breakdown. I mean, that's what I'll be looking to do, or kind of a seller into it. I kind of have to watch the price action at the time, but that's sort of how I'm thinking until the bulls can prove to me that they're going to get back up above this 2120 level, and at that point we'd have a lot more confidence that we're going to get to that 2180 target for the cup and handle. And if you don't know what that is, just go back to look at last week's show notes or last week's journal. And I show the targets there. I'm not going to show them here just because I think this pattern's in some danger. A quick look at utilities. This is one that we've been watching pretty closely. I did a write-up on it last week, so check the blog for that. But this looks like a big cup and handle. Had a nice breakaway gap here. So we want to just watch this downtrend line and make sure that, any pullback, that area kind of holds. Maybe we give it the gap, but you don't want to see it move too much below that area. But you really want to see these highs hold on any test. It looked like, they got above them, sat there, moved away this week. But this has, a good amount of upside. So go ahead and check out that article on the blog that I did last week if you're interested in the utility space. A few other charts that I wanted to go over with you guys is let's look at the XLY, the consumer discretionary. This is not typically good if this sector is weak, for obvious reasons. And what we're seeing here is the formation of potentially a large topping pattern here. And then on the shorter time frame in the right shoulder, this is the stuff that we look for is, do we see anything that's evidence that this thing might roll over? And I think we do. We see a smaller topping pattern right here. Okay, so what we want to do is watch it for any further weakness that's going to break this level. And the target would be, down in this area here, at least to start. But it looks like, we could be forming a massive topping pattern here. And if we take that on the weekly basis, just give you an idea of what that looks like, it would not be unreasonable to see this thing come down here in the 50s. The measured move would be, let's see, 60, we'll call it 67 and 81. So it's like 14 points. So yeah, it's like in the 50, like in this 55 area. It would not completely be unreasonable. And then if we look at a 161.8 fib, yeah, certainly down in this 59 to 60 area could be possible. So the risk reward wise, it's pretty good right up in this, compelling right up here if you are bearish. If you want to, what I would do is draw this kind of trend line and use that as my stop, which is what I probably plan to do this week. Look to potentially short that against this trend line. I don't know if I'll be right or not, but I know what my risk is, and that's the bottom line. Calculate your risk and your plan before the trade, and just let it play out, one way or another. The XME sector, again, this is an article that I did earlier in the year. We were watching this. If you search for XME on the blog, you'll see it back in February. I know that I wrote the blog. It would have been right around February 17th. I was watching this kind of inverse head and shoulders pattern, and it did trigger and acquired its target up in here, and then it went higher without me. I got out at the target. I think I actually acquired the target like right here, and I sold. And then the market went higher without me. It is what it is. But it appears now that we're forming kind of a bigger, you could either call this a cup and handle here, and this the retest, or we can even be saying that this is a bigger cup and handle here. But the bottom line is this looks, to me like it's going 21 and 11. It should get up into the low 30s, particularly on a breakout above this high. So that'd be what I'm watching for. And you can see even like a little, even over here in this handle, we're seeing kind of a cup and handle there. But for me, I want to see it, certainly break above this high. And then these highs, and that would kind of confirm the pattern. But looks like this thing could be setting up for another move higher. And that being kind of confirmed in the metals themselves. If you look at the gold and the silver, which we'll do in a second. Actually, we'll do that now. Here, if we're looking at gold, a few of you asked me about gold this week and how I felt about it. And the bottom, this to me, it looks like an inverse head and shoulders. So that's, to me, it's hard for me to be a buyer right into this resistance, but what I'd like to see is kind of this area become support, and then and away we go. But I think the target on this is like 149 on a breakout, so up in this area here, fill this gap maybe. So the gold looks fine. How would I trade it? This is, like I said, I don't like to chase it into resistance just because we have a pattern doesn't mean that it's going to trigger right away. So the way that I would be looking at this is to be buying any pullback towards this trend line. If we do it here, yeah. So any pull, there's potential. It's possible that this thing comes down in here. Who knows? And then bounces higher. But I'd be be buying kind of pullbacks into this 115 area maybe. And wouldn't want to own it much, if it does break below this downward trend line. But at this point, you can buy these into this dip or wait for the breakout and kind of buy it as it pulls back above this level. That's sort of how I would look at it. So you don't necessarily have to chase the breakout, but you could start buying. Usually what you'll see is a flag formation, something. You'll see it kind of break, and then it'll create this flag formation. So it'll do this, and you want to kind of be looking to buy into that or on the break of that with a stop just below the flag. But that'd be kind of how I would be trading gold. But it does look good. I have some silver in my portfolio from we're going to get to silver here in a second. I was buying silver down in here. And I get out of some in here because I saw the Head and Shoulders, but I held half, and it looks fine. It's going quite a bit higher. It looks like anyway. But I would trade that kind of the same way. It's tough. It's going into this. I think the target on the inverse Head and Shoulders down here is here. I think it's like 1735, but now it's creating kind of this bigger pattern here, this cup and handle. So you want to see it get the target and start moving away from this area. You have this high here. So you want to see these highs taken out and then start looking for pullbacks into that area. So that's silver. This is one that many are watching here is this European bank index, EUNF. EUFN. Okay, so now the this index here. If we look at the weekly chart, let's see. There was an Head and Shoulders top here that triggered, and then it created kind of this bearish flag, and that flag is now breaking down. The price target on this is also in the journal. You can look at the calculation, but it's like 1353, which is a test to this low, and it does look indeed like that it's going that way. So these look pretty nasty, the European banks, so you might want to look at those. Then the last one to look at is the biotechs. Last week during the show, I said that we were like right here, and I said, gosh, this looks a lot like it did over here. It looks like a repeat pattern to me, and I think that's sort of what this is indicating. This is the stuff that I look for. To me, I've been saying it. I had a conversation on Twitter about this a week ago, and people were telling me that I should be trading what I see, and I'm telling you, I was trading what I see. What I was seeing is that this over here looked like this over here, and you were running into major overhead supply here. Okay, and until this is not, you're not going to convince me that you're starting a new uptrend until you can get back above major overhead supply and show me that not only that we can get above it, but that it can become support again. We do sometimes it will head fake up in here and then roll right back over, but it didn't even do that yet. It failed right there. It's a lower high, and it looks like a flag, and it looks like this thing wants to go lower. It's pretty vulnerable here. Until, again, when am I wrong? I'll tell you, I'm wrong when this area up here can become support again. Okay, you can see it. This was all support through all this time. It's now resistance, and that's what this is telling you. And until that area becomes support again, you don't want to be a buyer of the bios. It looks like it's headed lower. It's a disaster. And I put both charts, the chart from last week and the chart from this week, in the notes today, and you guys can take a look at that. So that about wraps it up. I mean, to recap here, basically, if we look at it from a long-term perspective, we're holding this area, but the bulls need to get their act together here if they're going to take this market higher. They had a big chance this week with the cup and handle that we were watching. It broke out, and now it's failed back below the level. So until it can take out this week's highs, all bets are off, at least from the bull perspective. It looks like we are maybe just in a long trading range, kind of like we were last summer. If you look at here, this is basically March, and here we are here. I mean, it looks, we're basically, this area has just become massive resistance, and it's just a tough place to get through. And until we do, it could be just a range-bound environment for a while. So we'll see. Stay tuned this week. I'll be on with the morning pep talk on Monday. I'll tweet that out, and of course the daily recaps. Hope you guys have enjoyed the rest of your weekend. Take care.